Today we dive into the final part of our special three-part series, highlighting U.S. companies that are largely shielded from the ongoing tariff wars. In the first episode, we explored the basic materials sector. In the second, we analyzed key players in the consumer staples sector. And now, in this third and final part, we turn our focus to the energy sector, specifically companies that primarily operate within the United States and have minimal international exposure. This includes a diverse mix of utilities, oil and gas producers, renewable energy firms, and midstream pipeline operators, all of whom largely serve U.S. consumers and businesses. Because their operations are domestically anchored, they face significantly lower risks from global tariff disputes and supply chain disruptions. That said, while this list has been carefully curated based on domestic revenue exposure, it is important to note that some companies may still have a small portion of international operations. These areas could potentially be impacted by broader trade tensions. So, with that in mind, let's get started and uncover the energy sector companies best positioned to weather the storm of a global tariff war. Before we dive in, a quick but important disclaimer. This video is for educational purposes only. I'm not a financial advisor, and nothing you hear should be considered financial advice. These are just my observations and research focused specifically on tariff impacts. I do not own shares in any of the companies mentioned in this video, nor do I intend to buy them after releasing it. The purpose of this video is purely educational, to explore which US-listed organizations may be relatively more insulated from tariff impacts and international supply chain disruptions. I have not reviewed their annual reports, quarterly earnings, projected cash flows, or future growth estimates. My views are based solely on their domestic exposure and supply chain positioning within the context of tariff-related risks. This is not a prediction of future outperformance, nor a guarantee these companies will do better than their sector peers or the broader market. I also have not analyzed their debt levels, liabilities, or overall financial health. Please do your own due diligence before making any investment decisions. The energy sector includes a broad range of companies involved in the production, distribution, and sale of energy, spanning traditional fossil fuels like oil and natural gas, as well as renewable sources such as wind and solar power. In the United States, the energy sector is a critical pillar of economic strength, driving industry, transportation, and household consumption. What sets many U.S. energy companies apart is their strong domestic focus. Unlike industries that depend heavily on complex global supply chains or overseas markets, these energy firms conduct the bulk of their operations within U.S. borders. From drilling and refining to electricity generation and renewable energy development, their infrastructure, pipelines, power plants, and refineries, is firmly rooted on American soil. Their primary customer base is also overwhelmingly domestic, further insulating them from global market volatility. This inward orientation offers a significant strategic advantage. Companies with minimal exposure to international trade are largely shielded from the direct impacts of tariff wars and global supply chain disruptions. This domestic anchoring not only promotes operational stability, but also protects revenue streams, positioning these firms as a resilient force within the broader economy, especially during periods of heightened geopolitical tension. Recent tariffs on imported energy equipment have accelerated investment in domestic manufacturing and infrastructure development. At the same time, geopolitical tensions have introduced new dynamics in oil and gas pricing, pushing many energy companies to diversify further into renewables and strengthen their US-based operations. Eversource Energy has a market cap of $21 billion and operates in the subsector regulated electric, natural gas, and water utilities. Eversource Energy is a cornerstone of New England's energy infrastructure, a regulated utility company that delivers electricity, natural gas, and even water to millions of customers across the region. With a market capitalization of over $21 billion, Eversource stands as a leading utility provider focused not just on energy, but on reliability, sustainability, and regional resilience. Headquartered jointly in Hartford, Connecticut, and Boston, Massachusetts, Eversource operates across a tri-state footprint that includes Connecticut, Massachusetts, and New Hampshire. Through its regulated subsidiaries, the company serves a broad mix of residential, commercial, industrial, and municipal customers. even extending services to critical areas like fire protection and water infrastructure. With a dedicated workforce of nearly 10,700 employees, Eversource manages one of the most extensive utility networks in the northeastern U.S., supplying electricity, natural gas, and water to around 4 million customers. Its operational teams work year-round to maintain, modernize, and weatherproof infrastructure, ensuring that communities remain powered and protected in a region known for its seasonal extremes. Unlike energy firms tied to volatile global markets or complex supply chains, Eversource's operations are entirely domestic, governed by U.S. regulations and state-level utility commissions. Its energy and water services are sourced, transmitted, and delivered within the U.S., shielding the company from global trade tensions, supply chain disruptions, and tariff-related risks that often challenge internationally exposed utilities. As the energy sector shifts toward cleaner, more resilient infrastructure, Eversource has made significant investments in grid modernization, renewable integration, and sustainability initiatives, reinforcing its role as a forward-looking leader in the utility space. EOG Resources has a market cap of approximately $60.9 billion and belongs to the subsector oil and gas upstream exploration and production. EOG Resources is one of the most respected names in American energy, a pure-play exploration and production (E&P) company with a sharp focus on high-return, unconventional oil and gas assets. Headquartered in Houston, Texas, EOG has built its reputation by dominating some of the most productive shale plays in the United States, including the Permian Basin, Eagle Ford, and Bakken. What sets EOG apart is its relentless focus on operational efficiency and resource quality. The company excels at identifying, acquiring, and developing assets in shale formations that deliver strong returns, even in volatile price environments. Although the company maintains a small presence in Trinidad and a few international locations, its production, revenue, and operational base are overwhelmingly U.S.-centric. This domestic concentration is more than just a geographic footprint. It's a strategic advantage. With most of its supply chain sourced locally and minimal exposure to foreign trade dependencies, EOG is largely insulated from global trade wars, tariffs, and geopolitical disruptions. Its drilling rigs, pipelines, frac crews, and service contracts rely heavily on U.S. vendors and infrastructure, offering both cost control and reliability. With a lean workforce of approximately 2,800 employees, EOG runs one of the most efficient upstream operations in the industry, prioritizing capital discipline, technological innovation, and sustainable resource development. Exelon Corporation has a market cap of $47.6 billion and belongs to the subsector electric utility. Exelon Corporation is one of the largest regulated utility holding companies in the United States. A company that doesn't just deliver electricity and natural gas, but stability, reliability, and community impact. Headquartered in Chicago, Illinois, Exelon's utility operations span some of the most densely populated and economically vital regions in the country, serving over 10 million customers across 6 states and the District of Columbia. After spinning off its competitive power generation business into Constellation Energy in 2022, Exelon has redefined itself as a pure-play, fully regulated U.S. utility company. Its operations are focused entirely on energy delivery, ensuring safe, reliable, and affordable power through electric and gas distribution systems rooted in local communities. Exelon's family of utility companies includes Commonwealth Edison ComEd, serving Illinois, Pico Energy, serving Pennsylvania, Baltimore Gas and Electric BGE, Maryland, Delmarva Power, Delaware and Maryland, Atlantic City Electric, New Jersey, Pepco, District of Columbia and Maryland. With nearly 20,000 employees, Exelon supports critical infrastructure and plays a key role in regional energy resilience. Its teams operate, maintain, and upgrade the grid using U.S.-sourced materials and local contractors, ensuring tight control over supply chains and operational stability. Importantly, Exelon is 100% domestic. All of its operations, revenues, and regulatory oversight are based within the United States. This domestic footprint makes the company virtually immune to international trade risks, global tariff disputes, or overseas supply chain shocks. Its infrastructure is embedded in U.S. communities, powered by American labor, and regulated under U.S. jurisdiction, giving it the kind of predictability and security that global-facing companies often lack. In a world of rising geopolitical uncertainty, Exelon stands out as a defensive, reliable, and future-proof energy provider, focused entirely on serving American homes, businesses, and public infrastructure. Constellation Energy has a market cap of approximately $64.8 billion and belongs to the subsector power generation nuclear renewables. Constellation Energy is at the forefront of America's clean energy revolution. As the largest producer of carbon-free electricity in the United States, Constellation plays a vital role in supplying power that supports both decarbonization goals and energy security across the country. Headquartered in Baltimore, Maryland, Constellation operates an extensive power generation portfolio that includes nuclear, hydro, wind, and solar assets, with a heavy emphasis on nuclear energy, the backbone of its clean generation strategy. Formed after its 2022 spin-off from Exelon, Constellation inherited and continues to manage the largest nuclear fleet in the U.S. Its operational footprint spans multiple U.S. power markets, including the Mid-Atlantic, Midwest, New York ISO, and ERCOT, Texas. From powering residential homes in Illinois and Pennsylvania to supporting large-scale commercial and industrial customers across Maryland and New York, Constellation's influence reaches deep into the American energy grid. What sets Constellation apart is its entirely domestic operation. All generation assets are located within U.S. borders, and it sells wholesale electricity primarily into domestic regional transmission organizations and grids. This makes Constellation highly insulated from international trade disruptions or tariff risks that affect many global energy producers. While nuclear fuel sourcing, such as uranium, and specialized equipment are part of its operational supply chain, these are typically secured through long-term stable contracts with minimal volatility, reducing the risk of major shocks from global trade tensions. With a workforce of approximately 13,800 employees, Constellation Energy is not just a utility, it's a pillar of the clean energy future. It combines scale, stability, and sustainability in a way few companies can match, and it does so almost entirely within the U.S. Williams Companies has a market cap of approximately $71.6 billion and belongs to the subsector natural gas pipeline midstream energy. Williams Companies is a critical force behind the energy that keeps America moving. Headquartered in Tulsa, Oklahoma, Williams has built a reputation as one of the nation's leading midstream operators, focusing almost exclusively on the transportation, gathering, processing, and storage of natural gas. Unlike exploration and production companies that dig for resources, Williams Companies specializes in the vital infrastructure that connects America's major natural gas supply fields to the homes, businesses, and utilities that need them. From the deep waters of the Gulf of Mexico across the rugged Rockies to the bustling eastern seaboard, Williams' vast pipeline network weaves through the heart of the U.S., ensuring a steady, reliable flow of energy across the country. Their crown jewels include extensive interstate pipelines that transport natural gas from prolific fields like the Gulf Coast and the Appalachians directly to U.S. markets and LNG export hubs. This deep domestic footprint means that virtually all of Williams' revenue comes from U.S.-produced gas serving U.S.-based demand. In a world increasingly fraught with tariff wars and supply chain disruptions, Williams Companies stands out as a model of resilience. Their operations are firmly rooted in North America, primarily within the U.S., and they source critical materials, like steel for pipelines, predominantly from domestic suppliers. This strategic focus dramatically reduces their exposure to global trade risks and ensures operational stability even in uncertain times. Employing nearly 4,800 people, Williams Companies is not just moving gas, it is helping fuel America's energy future reliably and efficiently. By concentrating on critical domestic infrastructure, Williams Companies has positioned itself as a backbone of America's energy network, resilient against external shocks and ready to meet the growing demands of a dynamic market. NextEra Energy has a market cap of approximately $136.4 billion. It belongs to the subsector electric utility renewables. Its It stands as the largest electric utility company in the United States by market capitalization, with a strong emphasis on clean, sustainable energy. Headquartered in Juno Beach, Florida, NextEra operates primarily within the utilities sector, focusing heavily on electric utilities and renewable energy, particularly wind and solar power. The company's operations are structured around two major divisions: Florida Power and Light Company (FPL), a highly regulated electric utility that serves nearly 5 million customer accounts across the state of Florida. NextEra Energy Resources, a competitive clean energy business and one of the world's largest generators of renewable energy from the wind and sun, with assets spread across the United States. NextEra's footprint is predominantly domestic. While it maintains a very small operational presence in Canada, the overwhelming majority of its assets, customers, and revenue are firmly based within the U.S. This domestic focus greatly reduces its exposure to global trade disruptions and tariff-related risks. Even as it builds out its impressive renewable energy portfolio, the company leverages a diversified U.S.-focused supply chain to mitigate the impact of international tariffs on equipment and materials. NextEra's major infrastructure includes large-scale wind farms, solar installations, nuclear plants in states like New Hampshire and Wisconsin, and extensive electric grids throughout Florida. Employing over 9,300 people, the company is committed to delivering reliable, affordable, and increasingly sustainable energy solutions to American households and businesses. By maintaining a strong domestic foundation and leading investments in renewable energy, NextEra Energy not only secures operational stability, but also positions itself as a future-proof leader in America's energy transition, largely insulated from the turbulence of global trade wars. Duke Energy has a market cap of approximately $94.6 billion and belongs to the subsector electric utility. Duke Energy is one of the largest energy holding companies in the United States, delivering regulated electric and natural gas services to millions of customers across 6 key states. Headquartered in Charlotte, North Carolina, Duke Energy operates with a diversified portfolio that spans regulated electric utilities, natural gas transmission, and a growing commercial renewables segment. The company's utility operations are deeply entrenched in the Southeast and Midwest, serving customers in North Carolina, South Carolina, Florida, Indiana, Ohio, and Kentucky. In addition, Duke Energy manages interstate natural gas transmission pipelines reaching into the Mid-Atlantic, New England, and key U.S. production basins. Its commercial renewables division operates large-scale wind and solar facilities across the continental United States, reinforcing Duke's commitment to a cleaner energy future. Duke Energy's operational footprint is overwhelmingly domestic. Following the divestiture of its Latin American assets in recent years, Duke now conducts nearly all of its business within U.S. borders. This domestic focus shields the company from international tariff risks, global supply chain shocks, and geopolitical disruptions. Moreover, Duke primarily sources its equipment and fuel domestically or through stable North American channels, further enhancing its supply chain resilience. Employing approximately 27,000 to 28,000 individuals, Duke Energy is not just a major employer, but also a critical pillar of the energy infrastructure across multiple U.S. regions. Its large, diversified operations ensure that it remains a stable, reliable utility provider, even amid volatile global economic conditions. By concentrating its efforts domestically and investing in both traditional energy infrastructure and renewable growth, Duke Energy positions itself as a resilient, future-ready force in America's evolving energy landscape. Southern Company has a market cap of $101 billion and belongs to subsector electric utility. Southern Company stands as one of America's leading energy providers, with a strong presence in both electric and gas utilities. Headquartered in Atlanta, Georgia, Southern Company operates as a super-regional utility, delivering reliable energy solutions to millions of customers across the southeastern United States, including Alabama, Georgia, and Mississippi. The company's operations are primarily structured around its regulated electric utility subsidiaries, which serve retail customers, and its natural gas distribution companies that operate across 4 states. In addition to its core utility services, Southern Company is active in wholesale energy marketing, supplying power across much of the Southeast. Southern Company's operational footprint is deeply domestic. All of its generation, transmission, and distribution infrastructure is located within the United States, with no international business segments. This domestic focus provides a critical layer of insulation from the risks associated with global tariff wars and international supply chain disruptions. Moreover, the company relies heavily on U.S.-sourced fuels, such as natural gas and coal, and American vendors for much of its infrastructure and equipment needs, keeping its global exposure to a minimum. Managing an extensive and resilient infrastructure network, Southern Company is a major employer in the region and plays a crucial role in supporting local economies. Although an exact recent employee count is not immediately available, the scale of its operations underlines its importance in the Southeast's economic and energy landscape. By maintaining a strong regional focus, leveraging domestic supply chains, and avoiding international exposure, Southern Company remains a stable and resilient force in the U.S. utilities sector, offering investors and consumers alike a measure of security amid the uncertainties of global trade tensions. So there you have it, energy sector organizations, all deeply rooted in the U.S., thriving in a world where globalization is on pause. They don't depend majorly on overseas supply chains. They're not waiting on large shipments from foreign ports. They're significantly producing, processing, and delivering, all within America. And that makes them incredibly interesting in this era of tariffs, trade wars, and localization. Until then, if you found this breakdown helpful, give it a like, share it, and don't forget to subscribe to Markets and Global Trends.